My fellow friends in real estate investment trusts, last week on 2 days, specifically Monday and Thursday, you saw the severe weaknesses in Maple Tree REITs, that's namely MLT, MIT, and MPAC. Now you'll be asking, why suddenly, does Maple Tree REITs suddenly become Maple leaf REITs, that is severe weaknesses on a single day, double day, or even on a weekly basis? Well, in today's and this week's video, we're going to cover this. When do Maple Tree REITs and how have they become Maple leaf REITs? So instead of being strong, they have become vulnerable. So in this week's video, this is what we're going to explore in three detail. That is basically MLT, MIT, and MPAC. So, ladies and gentlemen, when did Maple tree kind of REITs became maple leaf kind of REITs? That is actually with weaknesses running through that makes them very vulnerable to intraday sell-off, intra-week sell-off in the market. Granted that they may be good REITs, but this, if you can identify them, give you the opportunity to position in a nice way as investors. And being nimble, smart, and sharp investors, that's what we look for. Let me start with Maple Tree Logistics Trust, something that we have shared with GCP Global Investor students 3 years ago. Now, GCP Global Investor students were delighted that we've been teaching for the last 21 years in REIT. We cater to high net worth individual, we cater to the index fund REIT managers, as well as family offices. Let's take MLT for instance. What we have shared with our investor students 3 years back was this. Well, when on the 22nd of November 2021, when they acquired the second portion of their 13 properties in China, 3 properties in Vietnam, and a proposed third-party acquisition of a property in Japan. Now, I was on a conference call on that particular secondary placement at the time, and I spoke and I asked the CEO, Ms. Ng Kiet, at the time, why are you paying 13 to 16% higher in a single year for the remaining 50% of its China properties in just a year? Now of course her response, as usual, is the fact that, well, valuations have gone up, industrial properties, logistics properties that they have positioned in China have gone up. Yes, I do concede that they have gone up, but to be able to go up like almost 16% single year, man, that's paying way too much. Of course, ladies and gentlemen, no REIT fund manager will tell you that they have overpaid for an asset or it's a wrong time to be buying an asset. But at GCP Global's um, investors, REIT investors class, this is what we warn about. And since, how have the price action been? Because ladies and gentlemen, being investors, the price action of the stock, of the REIT, is the best testification of how sharp, how smart you are vis-a-vis what the REIT has actually done. So let's look further. So let's look at basically the share price of MLT. You can see that since at that time when the share was at above $2, it has henceforth just come down. Of course, on the way down, there have been a series of up. In fact, if you count the up and down, there have been like 10 mini cycles within that 10 down cycle. So in cumulatively, MLT has been down since 2021 when we first highlighted that deal that was not, well, in our opinion, it was an acquisition that they have overpaid for their Chinese assets. MLT is down a woeful 24.4%. Now, the other thing, ladies and gentlemen, in that same presentation material for that acquisition, we also pointed out that very interestingly, even a REIT on MLT, actually showed a graph like this. Nothing wrong with the graph, ladies and gentlemen, but if you do notice, the red graph, that's the red drop, where they say that, for instance, the aggregate agreed property value is down 1.2% from the valuation by independent valuers. Now, 1.2% drop from 1.012.1 billion down to 999.9 billion. But if you look at the arrow in proportion to the red one, which is something that I have drew and presented in my class, you notice that that almost is a 25% down. So essentially, graphically, is the graph technically correct in presenting itself? Because graphically, it's trying to give the impression that it was a huge uh, uh, almost 20% drop as opposed to that only 1.2%. So ladies and gentlemen, being sharp and smart investors, this is what we're very for, because graphically it it sort of like give you the impression that is wow, it's a huge discount, but actually it is not. And that's what, ladies and gentlemen, at GCP Global, we point this out. Succinct, subtle differences, and it's key and very important in helping you to make the decisions, because the decision with respect to buy, when to buy, how much to position is something that you'll be looking at in the future. Now, the next graph that they have shown to you, the time was that, whoa, the Maple Tree of right of refusal asset from the management. Now, remember in 2021, before interest rates were on the increase, or before they started to increase, to be to be exact, they only started to increase in March of 2022. Now, all these assets are actually negative in the sense that if MLT is going to embark on acquiring them, because after all, it's from the sponsor, during these 2 years of the high interest rates, then it's actually negative news. And this is what something we highlighted in our class. And more importantly is that prior to 2021, MLT has already come to the market to raise capital many times. So, including the placement in 2021 and the subsequent ones, they have come to the market to raise capital close to 2 billion in the 4 years from 2020 to 2023. And more importantly, gentlemen, look at those institutions that have taken up their placement. What and how have they fared? Yes, ladies and gentlemen, from the 20th October 2002 placement at 2.027 down to the next placement on 23rd of November 2021, that's at 188. That is pursuant to the deal that was a deal when I had the opportunity to question the CEO in terms of the valuation that they paid, and then the subsequent one, 30th March 2022, which was last year at 1.645. Now, versus the price that you saw on Monday, just Monday, when you saw intraday weakness at 153, you notice that all the placements, ladies and gentlemen, yes, all three placements are below water. See, so ladies and gentlemen, it is very important to be buying into the REIT, and knowing when, that weakness continue to hold, because on and off, when there are market weaknesses on a certain day, you notice that MLT becomes no longer a maple tree, becomes a maple leaf, and that's where, yes, granted, it is a fairly well-run REIT. Okay, this present an opportunity for traders, the smart ones, to actually come in and position in a big way. That we want to share with you, ladies and gentlemen, is none other than MPAC. But before that, can I draw your kind of attention to our latest interview with Channel News Asia, Money Talks, with Miss Andrea Heng. It's out the previous week. It's gotten a lot of views, and I actually would like to actually draw your attention to some of the salient points I've mentioned in that half an hour interview, pertaining to how to actually pick REITs that are maple trees as well as those that are maple leaves. So let's move on to the second REIT, that is actually Maple Tree PAC. Now, Maple Tree PAC is one of the REIT that we have shared with our GCP Global investors, that they have made themselves a maple leaf. When they actually went in to acquire Maple Tree and AC, or rather to merge. As I said before, no REIT, when they do a merger, will concede that the merger will render them weaker. In fact, they always tell you that, wow, they will be stronger, they have geographical and strategic diversification. Across tenants, they are actually less exposed or concentrated with. But how much of this is rubbish and how much of this is true, ladies and gentlemen? Let's take Mapletree PAC for example. The share price is a good testification that the merger has turned out to be really bad for Mapletree commercial trust investors. Yes, Mapletree PAC was previously known as Mapletree Commercial Trust. You can see, ladies and gentlemen, from the share price chart, since the merger was consummated, right, in the last 2.5 years, the share price has only been in one direction, that is all the way down. Now, this all the way down did not start after interest rates starts to increase. They already started when the merger went into place. And let me just share with you some of the key things that we share with GCP Global investors, who are actually made up of family offices, high net worth individuals, and index fund managers of real estate investment trusts. Now, one of the key things that we share, ladies and gentlemen, is that we don't like the merger. Okay, we think that few things. Do look at our past videos and even our last video 8 months ago on Mapletree PAC. We told you to stay off Mapletree PAC. The slump will continue, and the weakness in the share price will continue. And true enough, because in a cooperation, ladies and gentlemen, you can see this is the last 8 quarters of the Mapletree PAC dividend or DPU. And what is it like? Well, it's just down all the way. Granted that they only started to pay quarterly dividends from the second quarter of the year, way back in 2022. You can see that it's just all the way down for the 2022 and 2023. So if your DPU basically does not improve post acquisition, so where is the catch, ladies and gentlemen? Okay, now so this contrasts very sharply with what Mapletree PAC presented on the 29th of December 2021, the day in which they actually say that they announced the merger. Strange, right, ladies and gentlemen? When we look at our last video on Mapletree PAC, we already questioned why does the merger have to be announced on the last day of 2021 and on a day in which the volume weighted price was at 2.08 based on the 1 day average. And you can see this is exactly what they say. They mentioned that the pro forma DPU would increase 6.8%. The pro forma NAV will increase 7.1% if the merger had been consummated in the full year. But essentially what happened? Look at the DPU, ladies and gentlemen. Since then, quarterly DPU is just on the way down, contrary to the 6.8% that improvement that they were guiding in the acquisition. So who is correct, right? So is it therefore extenuating circumstances that actually cause the numbers to be different, or is it really bull? Well, you decide, ladies. Trust. Now, Mapletree Industrial Trust is the better one among the three Mapletree REITs, as we have mentioned in our class. But we also mentioned, ladies and gentlemen, in our quarterly classes that a good entry point would be below 220. Why? Because along the way in the last 2 years, when interest rates increase, Mapletree MIT tested 220 on, it first hit 220 in September of last year. Then it tested again once, twice, 3 times, 4 times throughout last year. So we told GCP Global Investor students a good entry point is below 220. That would have represented a 33% drop or 30% drop from its high of 330. That was actually in September of 2020, right? And one of the key things that we look for is this. You see, if you can see that the DPU for Mapletree MIT, was on the way up as shown by the orange deep quarterly DPU. So when it was all the way up, the share price went all the way up. But when the DPU enter a lackadaisical, flattening downward movement, as you can see from the red box in the last few quarters, it only lend itself weakness to the share price. And true enough, there were 5 times in which the share price went below 220. That's where our investors bought in a heavy way. So as again, ladies and gentlemen, in this annual, it was quoted in Business Times. This was actually the front page on Monday of 22nd of January, just last week. And I've mentioned, let me just quote what they say. Veteran investor and chairman of GCP Global, Gabriel Reit, believes S-REIT earnings will be muted at best, with foreign REITs facing a deadly combination that includes higher interest rates, foreign exchange costs, gearing, and uncertain capitalization rates. More importantly, S-REITs with predominantly foreign assets in China, United States, the United Kingdom, certain parts of Europe, and would underperform. So you can see, ladies and gentlemen, with the results that have been out so far, these are the REITs with this kind of assets that have underperformed. And as I've mentioned in my front page interview, corporate results for this quarter and next quarter for S-REITs will be muted at best and disastrous at worst. So if you have been forewarned, as in our GCP Global Investment classes with our investors, do join us for our class on the next one on 20th of March, so that you will know what to expect for the next quarter, what to expect for the next half year. Do sign up now to enjoy the early bird special. We have extended the early bird special until because this coming week is Chinese New Year week, so until the 9th or the 10th. So do sign up and grab this last opportunity for the Chinese New Year. So once again, be careful, enjoy your Chinese New Year. You can only enjoy it if you're avoiding losses in your real estate investment trust portfolio. But if you do and do incur some of the losses, do understand and ask yourself why. If you can't find a reason and you need a good consultative platform or alternative view, do sign up for our classes where we give you our best sincere inputs, where it's no holds bar, downright analysis of the data that the REITs present. So once again, go hey fat and a happy new year.